Vanguard is the king of index funds, and this is because of its strong return, the low-cost funds that Vanguard is providing, and the diversity that it provides. If you're looking to start investing or to grow your money, but you're not sure where to start, then keep watching. In this video, I'm gonna go over the best 3 Vanguard ETFs, in my opinion, that you can start investing in today. Now, before we do go ahead and get started, there's a few things that I wanna cover, just so that these explanations make a little bit more sense and allow you to make a better decision. First off, an ETF stands for an exchange traded fund. An ETF is a basket of securities or funds or shares that are sold on an exchange. They combine features and benefits similar to those of stocks, mutual funds, or bonds. Now, like stocks, ETFs are traded throughout the day at prices that change constantly based on the current demand and supply. Now, the second important thing I want you to know is something called the expense ratio. An expense ratio is a fee that investors, aka you, are charged by a mutual fund or an ETF. This fee covers the cost associated with administration, portfolio management, marketing, and more. These fees are usually percentage-based and represent an investor's annual cost. Now, for your knowledge, a good rule of thumb according to Morningstar for an expense ratio is that anything under 0.2% is considered a low expense ratio or a really good fee, and anything over 1% is considered really high. So you want to be wary of those higher expense ratio ETFs because those could really start eating into your profits. Now let's talk about a real-life example so that it makes a little bit more sense. If you're looking into an ETF fund to invest money in and you see on the description that it's a 0.03% expense ratio, that means that you will pay an annual fee of $3 for every $1,000 you are investing into that ETF. So a 0.03% expense ratio really isn't bad. So for example, if you decided to invest $3,000 into your ETF, that means that you will be paying a $9 fee. Now, Vanguard is known for having some of the lowest expense ratios in the industry, which is why going for a Vanguard ETF may work out in your favor. The next thing I want to talk about is something called the risk potential chart. So Vanguard has something called a risk potential chart that goes from 1 to 5. 1 is less risky, less reward. 5 is more risky, more reward. So this is also something that you want to be aware of when you are trying to figure out which ETF you want to invest in. Okay, so now that those important explanations are out of the way, let's get straight into it. We are going to be covering the 3 best Vanguard ETFs that you can start investing in. And I also want to put the disclaimer out there that I am not a financial advice. This is just what I think are the best 3 ETFs based on my research and my opinion. So make sure to do your own research and your own due diligence before putting your money anywhere. But these are the top 3 that I think are really good investments for the long term. Okay, so for each ETF, we're going to be going over a few different things. We're going to be going over the description of the ETF, the expense ratio, the risk rating, number of stocks in the ETF, fund total net assets, and the average annual returns between 1 year and 10 years. So at number 1, we have the Vanguard Total Stock Market ETF, ticker symbol VTI. VTI seeks to track the performance of the CRSP US Total Market Index, large, mid, and small cap equity diversified across growth and value styles. Employs a passively managed index sampling strategy. The fund remains fully invested, and low expenses minimize net tracking error. It's coming in with an expense ratio at 0.03%, so that's really good, with a risk rating of 4. We go down here, VTI has a total number of stocks amounting to 4,139, with the total net assets being $1.4 trillion. And if we look at the trend, the growth over the last 10 years, as you can see, the return has been pretty good and increasing. Coming up at number 2 is the Vanguard Real Estate ETF, ticker symbol VNQ. VNQ invests in stocks issued by real estate investment trusts, companies that purchase office buildings, hotels, and other real property. The goal is to closely track the return of the MSCI US Investable Market Real Estate 2550 Index. It offers a high potential for investment income and some growth. Share value rises and falls more sharply than that of funds holding bonds. It's appropriate for helping to diversify the risks of stocks and bonds in a portfolio. The expense ratio for VNQ is 0.12%, so again, pretty good, with a risk potential of 4. VNQ has 168 stocks, with the total net assets amounting to $91.5 billion. And as you can see, again, over the last 10 years, the return is really good. And coming in at number 3 is the Vanguard S&P 500 ETF, ticker symbol VOO. VOO invests in stocks in the S&P 500 index, representing 500 of the largest US companies. The goal is to closely track the index's return, which is considered a gauge of overall US stock returns. It offers a high potential for investment growth. Share value rises and falls more sharply than that of funds holding bonds. It's more appropriate for long-term goals where your money's growth is essential, and this is a really good one. The expense ratio is 0.03% with a risk rating of 4. It has 507 stocks with the total net assets amounting to $856.1 billion. And same with this one, the average annual returns have been really good over the last 10 years, especially since the inception. So again, a really good one to invest in. Now, if you're interested in learning more about investing and other ways to make money online, then check this video out next. I'll catch you in the next video.